the finance ministry had its own set of announcements up its sleeves on Friday. 10 public sector banks are now going to be merged into 4 mega structures. Now, everybody's heard about it. The question is, do you know the intricacies? That's the thing that we're trying to put out here. The government claims it's been enthused by the success it's had by merging Dena Bank and Vijaya Bank with Bank of Baroda. Once completed, this move will bring down the count of state-run banks from 21 to 12. Vishwanath Nair has the details and likely the implications based on the conversations that he's had with people. Vishy, good morning. Well, 12 banks. I don't think anybody thought that this would ever happen.
That's right. Morning, Neeraj. So, obviously on Friday there was a really surprising announcement that came from the finance ministry. But so let's first take a gander at what exactly this merger is about, which are the banks that are being merged, and possibly talk about the implications after. So, what the government is calling them are the next generation public sector banks. Essentially, these are going to be large entities that have a national footprint, but also have some kind of global reach. So, these are the 4 superstructures or mega structures that they are going to be creating by merging these 10 banks and creating these 4 large entities. So let's look at some of the anchor banks which are going to be leading the entire charge when the mergers happen. So Punjab National Bank, Canara Bank, Union Bank and Indian Bank, all 4 of them are going to create 4 large banks of different varying sizes depending on the kind of banks that are being merged with them. Let's take each individual set, starting with the Punjab National Bank set, which basically contains United Bank as well as Oriental Bank of Commerce. All of these put together is going to create the 2nd largest public sector bank in the country. Now, remember that these numbers don't really matter much, but still it is important to know that these are going to be large entities. So, but then you also have to look at where PNB stands as far as the capital adequacy ratio and gross NPA is concerned. Large NPAs as well as a low capital base as far as PNB is concerned. How the government is helping PNB to overcome this, we'll come to that later. But looking at this first structure, let's also look at the branch as well as the employee statistics that are there in this specific bank. There are about 1 lakh odd employees that are going to be there in the combined structure, as about 11,500 odd branches that the bank will control. So a fairly large bank with a fairly large footprint spread across the north as well as the east. Now the second set, which is going to create what according to the government is the 4th largest public sector bank, is a Canara and Syndicate merger. This is going to be focused purely on the south. Both of these are south-based banks. There again, the Canara Bank is slightly lower capital adequacy wise. It's slightly lower as compared with Syndicate Bank at about 13.7%. Just looking at the branch as well as employees part of the story, there again about 90,000 odd employees and 10,000 odd branches. Large structure again. With a wide presence across south of India as well as some parts in the north. The third structure consists of Union Bank, which is going to be merged with Andhra as well as Corporation Bank. So Union Bank is going to be the anchor bank in the system. There again, Union Bank has had its problems with the asset quality problems as well as capital adequacy issues. But over the last 2 or 3 quarters, the bank has been trying to come out of it. That is what the bank has been saying, that we have managed to turn around the bank and therefore the future should be brighter. With this merger, the problems are that once the bank starts to turn around and starts to focus on growth, you saddle them with a large merger, and that takes away a lot of management bandwidth. We'll get to all of those points later, but first let's look at the employees and the branch situation here. According to the government, according to Nirmala Sitharaman, this is going to be the 5th largest public sector bank in the country, 75,000 odd employees as well as 9,600 branches. So again, fairly large structure, but still within the public sector banking space, it's the 5th largest. The last set is Indian Bank and Allahabad Bank, which again is sort of a north-south sort of connection. Indian Bank largely based out of Chennai, Allahabad Bank a Calcutta-based bank, both of them coming together. Now Allahabad Bank has had major problems with the asset quality issues. They've also had some issues with respect to large-scale frauds and corporate governance issues. Previously, there has been a CEO who has had investigations conducted against her. 17.43% gross NPA, while Indian Bank is about 7.33%. Now, Indian Bank is one of the more well-performing public sector banks. It has managed to keep up its profitability as well as its low NPA base. So now with this merger, we'll have to see what happens to Indian Bank and whether that worsens. But looking at the employee and the branch situation again, 43,000 odd employees and about 6,000 branches. still considerably large bank, but the problems will be with Indian Bank because Indian Bank is considered to be one of the best run public sector banks, smaller public sector banks in the country. So once you merge it with Allahabad Bank, what happens to the final balance sheet? Those are all questions that need to be asked. To help all of these banks go through this merger, the government is supporting them with some kind of capital infusion. So especially Punjab National Bank getting about 16,000 odd crore, Union Bank of India getting about 11,000, 12,000 crore. So what they're doing is giving Bank of Baroda about 7,000 crore. Bank of Baroda is obviously not part of this, but they've said that they've been through a large merger recently, and the effects of that or the results of that merger are quite positive and quite encouraging. So we're giving them more money so they can push front growth. There's also Canara Bank, which is getting about 6,500 crore to complete this merger with Syndicate Bank. Similarly, these are the other banks which are also getting some part of that money. Indian Bank, again, as you can see, 2,500 crore, the least amount of money, probably because it is very well placed to complete that merger. So that's part of the entire capital side of the story. Implications, as I said earlier, there's going to be the impact of management being consumed with the kind of merger-related work that happens. When we've spoken to past bankers who have worked on the SBI merger, who have worked on the Bank of Baroda merger, everybody had the same point of view that this is a 12-month-long process, which means that if you have 10 large public sector lenders stuck with merger-related work for 12 months, what does that say about, say, credit growth or economic growth in general? How will that turn around? Plus, you have to focus on recoveries, on NPA management. All of that focus goes away because you're trying to merge 3 balance sheets or 4 balance sheets together to create a superstructure. So all of these concerns are still there with bankers, how exactly they're going to achieve it, whether the final structure that comes up is going to be stronger than some of the parts. So that is an important question again, as far as the merger is concerned, Neeraj.
Well, Pishi, thanks. So just one quick 30-second answer. Your conversations with PS Jaikumar, has he sounded very confident of merger synergies happening in a hurry?
He was fairly confident. I mean, the evening of the announcement, he said that what we have achieved through the merger at Bank of Baroda was fairly encouraging. I mean,
okay.
all that you need to do is move the staff, and then everybody starts sort of working along, and we should be fine. And with these mergers, he's sure that this is going to turn around the economy, have a very well efficient public sector banking system. So but that's his expectation. Let's see what happens actually.